Righto, Money Miners. Me and GC running the show. How exciting.
I know. It's going to be the Maddie Michael LEGC JV for the next 2 weeks.
And you are bringing in some different fashion every day.
I know. I've got my little matching set today just to spice it up from the Money of Mine t-shirt. So, no, it's good fun.
It's like candy cane quarterlies.
Oh, speaking of quarterlies,
Mate,
it is quarterlies mayhem, like we said today when deciding the Director Special newsletter headline. Like, it's just quarterlies mayhem.
They just kept coming out.
They just kept coming out.
What do we got today? We've got a bit of Boss Energy. We've got Pilbara. We've got Develop.
Touch on a bit of Gold Road and Perseus. So. Yep. A real a favourites box, you could say.
Well, Ramelius had theirs. I'll tell you what, here's a tip to the bloody MDs out there. If you want to have a quick quarterly call with absolutely no questions, or give old Mark Zepner a bloody call for a few tips. So 20 minutes they got it done in.
That's quick.
Help you bloody with one question at the end asking about why the grade was higher than expected. So
horrible.
Helps when you make $175 worth of free cash in the quarter. Oh, Zeppy probably had the golf clubs in the boot ready to go. Just finished the quarterly call off to Karen up for a hit. Oh,
well done.
Enjoy it while you can. Let's lead her off. For me, you dog mates, bloody, we better start with Boss Energy. Logical place to start.
Yep.
Go uranium. Uranium just hasn't. Mate, who would have thought a year ago or year and a bit ago we'd be talking about $70 a pound spot?
I know.
But it's sitting there lurking. It's 81 term.
And there was a bit of a uptick again in some of those names or most of those names after the big sell-off the other day with all the deep-seek news and all that.
One. Yeah, well, they got absolutely hammered yesterday. But, you can see a lot of green on screen for the U-Dogs. Boss was up like 15% on the quarterly, and then it sort of retraced a bit through the day. So, because they finally released, which is what people were waiting for, their costs now they declared commercial production as of January 1st, and they've set a C1 cost for remainder of FY25 for this half, Aussie $37 to $41 a pound. So the restart study had C1 of Aussie $24.62, so that's probably expected with inflation. Probably better to use Aussie dollars at the moment because, restart studies, US was, back then, God, the exchange rate has changed so much. It's not really bloody applicable. So I'm just going to say Aussie dollars. So I think that puts so they're all in cost. So CapEx and the operating costs, they've got at Aussie $80 a pound for the remainder of this half. So that the term price is $130 a pound in Australian dollars
at the minute
as of today. So,
okay.
So that I'm pretty sure that includes the remaining capital for columns 4, 5, and 6. I think a lot of it's been expended, but it'd be like the construction of them, the steel and everything. And then also like the wellfield construction for the future, because they refer to in the announcement, and I've talked about it before, the first fill costs for new well fields, because you got all the acid that goes into preconditioning the wells, and then
once that's done,
all the initial ferric and acid that goes in, but there is potential to recycle it in future.
Okay.
So they've got 2 well fields on at the moment. They're going to 3. I think peak production at 2.45 million pounds. They'll be at 6 well fields, I think, but that'll probably see. So there might be a while till that recycling takes effect on the actual cost of reagents. So, but yeah, you'd imagine once they get to that point, it's going to be better bang for buck on the fixed costs anyway. So you would imagine that all-in cost will come down in time with more pounds per fixed cost. So you can't really compare it directly to Paladin on a cost front for C1 costs, because Paladin they're obviously processing stockpiles, but even when they are mining, it is a different processing. But for an ISR, you got a lot more sustaining CapEx that goes into the operation because of the wellfield construction as you go. It's like having a lot of stripping as you go for an open pit.
So it's a little bit difficult to compare like for like.
Yeah,
Okay.
so you sort of cash in, cash out's the best way, but it is a lot different on the sustaining capex side. So, but I think it's come in. I think it's surprised, and we'll get into it's like, what, 18, 19% short, boss, and whether the streets was anticipating some sort of downgrade or some sort of real cost blowout. But I think today's, and you listen to the call from all the analysts and everything, like it's all pretty bullish and they've delivered.
So surprised on the upside a bit.
So it's whether how long these shorters will hold on for or if there's another catalyst they're thinking that'll come along. But it appears if they are shorting it for that reason, it's looking like their boss are working against it. So
interesting.
Yeah. So and with the capex, like I say, that once the well fields get going, like the fixed costs will come down. The all-in costs would come down, but there is that possibility in future that big chunk of capex needed for the Goulds Dam, which is 80 kilometres away.
Okay.
So, and that's would either entail putting an IX column out there to service that and then bringing back like the pregnant solution or like bringing back the loaded resin, back to process it further at the Honeymoon project, or this would be probably more likely just actually run 80 kilometres worth of pipe from, and like, so it'd be 2 80-kilometre pipes, one an in and an out, and then run the well field. I think that'd be you'd think that'd be easier to get permitted because it's just another well field, but you don't have to build a plant there. You don't have to build like the water recycling system that's needed out there because that's a big part of the whole process is the recycling.
Daishsat, yep.
So I'd reckon that'll be an option. But that is going to be chunky capex to do that. So there is still a bit in the future. Geez, this might be a bit bloody early, but 80 Ks of pipe, considering the location near Adelaide, the home of Nathan.daish and Daishsat. So wouldn't you, while you're running the pipe, just do a bit of a double check with some geophys on the way? Because in between point A and point B, look, not saying they've not adequately surveyed the place, but just a double Daishsat geophys check. Just to make sure there's might be I think they go for gravity lows for uranium deposits, possibly. Okay. Gravity low, or maybe it's a gravity high. I don't know, but
Nathan.daish knows.
Nathan.daish and Daishsat do know. And look, they're a logical choice. They're got an office in Adelaide. Mate, they're
already there.
And they're all over WA as well. They're getting huge. So that makes a lot of sense.
Crew on your side.
Sorry for an early ad there. Yes, they produced more than they drummed is probably the thing that stood out a bit. So they produced 215,000 pounds, but only drummed 137,000 pounds. Mm-hmm. So they've actually, and they attributed that to the commissioning of the second kiln, and that's in the drying and packing, like the back end part of the plant. So that kiln is, my understanding, that's what converts when they talk about drying, that converts the yellow cake, the UO4, uranium hexafluoride, I think it is, into U308. So yellow cake's actually UO4. U308, it's more of a bloody olivey colour. So that's what that kiln,
what the kiln does, makes it the U308.
Yeah, so and I guess the commissioning of that second kiln sort of held up the actual drumming of it. But going forward, I think like once this ramps up and there's a lot more drums that are needed to be packed, it's going to be a bit of a focus. So because there's a bit of work that goes into the drumming of the uranium. It's not like pouring gold where you got this fucking highly concentrated thing that's worth 4,300 an ounce, and you're pouring kilos of it at a time. Because a drum of uranium's about, depending on the site, I think it's 350 to 450 kilos, so about 770 to 1,000 pounds of uranium per drum. I'm not sure how big theirs are. So, like in full nameplate, when they're at 2.45 million pounds, that's like 8 to 10 drums a day every day for the whole year that need to be completed. So, and like, because you got to get, it's like all automated because you can't be in there bloody just fucking pouring uranium on yourself.
Yeah.
So, and then like you got to pour them and then you got to one at a time, then you got to assay, then there's a cleaning process and like, so there's a bit
more
to it.
involved.
Yeah. So I think the just getting like de-risking that back end of the plant to really get that flowing and ensure that, you know, you can adequately drum it and everything's going to be a big focus. That's something to watch out for in the future. So the numbers they've released already, they need to produce 625,000 pounds to reach guidance of 850,000 pounds. So they've got the third column is up and running. And now that second kiln's in operation, they said they had about 12 days down with, I think it was 12. Second kiln commissioning had some power issues, but said, look, they average for 10-day period in January, 3,900 pounds per day produced. Said like one day they had 7,000 pounds produced. So like on those numbers,
if you extrapolate it out, should they meet guidance?
Should meet guidance comfortably
if they keep running at that sort of rate.
So and I think that's they're sticking to what they sort of promised in the ramp up study, the restart study. They're not going to bloody. You wouldn't think they'd want to go over. Like you want to leave a bit in the tank, but like everything, like they've been hitting the mark every quarter. So it's looking like they're going to piss it in. Hopefully, so they did mention on the call that because like when they talked about the numbers, like saying they can produce 7,000 a day, and like that's 7,000 pounds a day from two columns. That's 7,000 pounds a day. That's the nameplate. What 6 columns is supposed to produce, but
they only did it from that.
Yeah, so but they did highlight that those columns 4, 5, and 6 are for when they start bringing in lower grade parts of the resource and blending it all together because they're obviously getting a bit of high grade at the moment. So it's not like they're going to start producing 4.5 million pounds. They clearly highlighted that. It's like those extra columns they can start bringing in everything, and once you've got 6 well fields online, you're going to have some high grade ones, you're going to have some low grade ones, and it should hopefully blend all together. So, but look, it just shows the lixiviant's working, the chemistry, like the screens are obviously in the right bloody vertical position on the paleo channel, which from what I've heard, like Uranium 1 when they had it, like the screens where the bloody lixiviant was going in weren't actually at the right section of the paleo channels. So, so a lot of work goes into the downhole logging to know exactly the exact position where that paleo channel is. So the IX plant's working well, recovering nearly 98%. So, all going good.
Yeah, and then so on the cash or the cash flow side of things, how's that sort of panning out?
So considering the capital that went out and probably the Alta Mesa operating costs, like cash went down 1.5. So it looks still a bit of capital going out the door. And had operating costs at Alta Mesa of 4 million. It said, I've read 2 different versions of it, but in the announcement it said it sounded like they were going to receive their first shipment from Alta Mesa of 35,000 pounds. But then I read a note where that's saying they'd already had received it. So I'm not sure if they are still waiting on the payment for that. So that's a bit of cash to come in to offset that operating cost. It said they did draw down some inventory and opportunistically sold it. But they've still got, I think, what did it say they got? I think they got, out of the 1.25 million pounds they had, 200 was loaned to Encore and they've drawn down a bit more. But they said they're going to replenish it. I think the 200,000 pound loan to Encore, because you can see on the receivable, that's worth 35 mil. So, because when they loaned it to Encore, the uranium price was over US $100 a pound. And at the election of boss, Encore have to either return the uranium or return the cash. So based on the at the $100, not at today's price, at that
price at that time.
So hence that 200,000 pounds is valued at $35 million, which is much above what
it'd be worth at today's
on the
prices.
spot market. Yeah. So, but it was interesting that that loan for that uranium, that 200,000 pounds, was repayable in 12 months' time, and that was looking at the website here on Encore. That was December 6th, 2023. So it's gone beyond the 12-month period of when the loan was supposed to be repaid. So I'm not sure, and because they also mentioned the total cash and liquid investments went up 7 million. So there's a bit of help on the exchange rate for the Encore holding, but I don't know if Encore holding. I looked up the share price; it was in Canadian dollars, but it was a 10 million US investment, but their listed investments, liquid investments, are $34 million Aussie. So if you look back at the Encore deal, so US 10 million, it was 2.5 million shares. That's worth about 13 million Aussie today based on Encore's share price.
Yeah.
So they've got an extra 21 mil Aussie invested on top of that. So they've either topped up their holding in Encore or they hold something else sub 5%. So nothing public about. There's an extra bit of listed investment on top of that initial Encore holding. So
yeah, interesting.
Yeah, not sure. Because we did talk like the logical thing in future would probably be the Boss Encore tie-up. So yeah, not sure. Nothing released. So we'll be watching this space.
So overall, what was your sort of key takeaway from the whole quarterly?
Well, for a restart, look, they're delivering on the ramp-up numbers. Like, they're in a bloody good financial position with no debt. Like, got cash, got the money coming in from Encore, got the inventory. I just can't really see a downgrade coming unless there's something operationally that fucks up in the next 6 months. Because
when does their ramp up, would you say, sort of technically complete? When, I mean, it's sort of, I know
FY27, I'd say. So it's 850 for this year, this financial year. I think next year will be, I think it's 1.6 or maybe 1.5, which is because by the end of this year, calendar year, is when you're going to have all 6 columns running. So then they'll commission that. Then I would say guidance for FY27 will be the 2.45 million pounds. Okay. And I think they're licensed to produce 3.3 out of there. So I think, but like the big thing for that 2.45 motor when you got 6 columns going is going to be like a big continuous, like the delineation drilling, setting up the well fields ahead of time, making sure the resource performs, because there's so much variance in the paleo channels between delineation holes. So making sure there's some good buffer on a reconciliation there. Like, you're going to need new well houses to keep the moving the well fields, making sure that back end of the plant is, optimised and debottlenecked pretty well to drum it all. So, but looking pretty good at the moment. So, yeah,
right.
Good on them. So good to see a positive restart. So
that's right.
All going wood at this stage. As you always know, things are subject to change without notice, but
so far this
uranium
getting there.
Yeah. So righto, GC. Speaking of something else that is sort of yellow, gold.
Yes. So I know there's been that many bloody gold quarterlies come out today, but I thought I'd quickly touch on a two that sort of had a little bit in common. So there's 2 gold companies today that between their cash equivalents and investments have pretty much roughly $1 billion. And one of them is Perseus and the other is Gold Road. So I'm not going to...
$1 billion each.
That's between cash equivalents and any listed investments.
Jesus.
That's a lot of money. And actually, funnily enough, there's also quite a few, which I won't go into today, but there's actually quite a few gold producers now that have got $500 million cash. Yeah. A lot of those, our $500 million, $1 billion kind of thresholds are getting met, which is just stupidity.
You're
But
starting to sound like Dr. Evil. Like, I want a bajillion dollars.
Jillion trillion dollars. So I won't touch on the quarterlies too much here, but just very briefly. So Gold Road finished the quarter with 174 mil in cash and equivalents, and then they had listed investments with a market value of 743 million at 31 December. So which essentially is their De Grey stake.
Yep.
Now, mind you, De Grey's gone up 11%. Its share price has gone up 11% since 31 December. So that 743 is now a little bit over $800 million now. So if you take the cash and equivalents and those listed investments, you've got, almost $1 billion that Gold Road's got there. And assuming...
And very easy to liquidate that stake when it anticipate it becoming a Northern Star share. It's not like it's in a liquid stock at all.
No,
biggest
that's
gold
right.
miner in Australia. So
I mean, if assuming that Northern Star and De Grey deal does go ahead as planned, I think it's reasonable to assume that Gold Road isn't a natural holder of Northern Star stock. So I imagine one option would be like the block trade that out to get some cash for it, or they might even sell the De Grey stock they have now at today's prices and get cash for it that way.
they might just hold the Northern Star stock forever.
They could
It's worked for a year.
It has worked pretty well.
They might just keep making money off stocks.
Who knows? Stock picker or Gold Road. But obviously, if they were to do that in either situation, there's obviously they're going to incur some tax on the sale of those shares. So it's not going to be like a clean, $800 million that they're going to get. They'll have to knock a bit off that for tax on some like pretty high level numbers. So excluding any tax impact for selling any De Grey or Northern Star shares, whatever they may do. They're currently a $2.6 billion market cap company, Gold Road. So if you take around $1 billion off that, for all these cash listed investments, blah blah blah, that's a $1.6 billion EV. So that's pretty cheap when you compare that against, other Goldies in that sort of production profile range, like your Capricorns and Genesis.
But is that saying what, pretty much 1.6 bill for half of Gruyere?
For half of Gruyere, pretty much.
Yeah.
And everything else that they've got is just like bonus.
Yeah. Interesting. Very interesting.
So, and I mean, okay, have they got a lot that they're going to be, spending money on in the next little bit? There is some sort of modest capex, but in the next few years, but it's nothing sort of crazy. They did earlier this week put out their 3-year outlook for calendar year 25 to 27 for Gruyere. So they're looking at sort of for this current calendar year, 325 to 355,000 ounces. This is on a 100% basis for Gruyere. Yep. I mean, this calendar year 24 that's just gone, they did 290 for reference, so that is a bit of a step up. But the all-in sustaining range they've given for this calendar year is 2,400 to 2,600 Aussie per ounce. So for context, last year was about 2,200, so also a bit of a lift. Main reason for the production and the cost increase is they've sort of completed that stage 4 stripping in the pit. So now they've got full access to the ore body and also some higher grade ore. And that all-in sustaining basically includes all the capex, which a lot of it's, things like cutbacks, tailings dam lifts, things like that. They've included it in the all-in sustaining.
Righto.
Rather than like sort of a capex item. So look, I mean, cash is cash. It all sort of, works itself out in the end anyway, but they've sort of incorporated it in that component. But they're also adding as part of the sort of production increasing, a 200 accommodation rooms at the Gruyere village.
Oh, in it for the long haul.
Yes.
Paying their share of it. Like their 50%.
Oh, I imagine it should be for the whole village that works at Gruyere.
But they should be you would think for producing that ounce profile, like 170,000 ounces for their share, like being a non-operator, like, God, you shouldn't have many overheads. You wouldn't think, being a non-operator and just holding a stake.
No,
Like,
there wouldn't be too much compared to the regular gold producer. No.
Yeah, yeah. But and so that should be yielding a shitload of cash, and there is a natural home for that, considering your 200 rooms that
Yes.
are going in.
I would hope they've gotten in contact with Paul Natoli from Grounded to sort out that Gruyere Village expansion. So now, Maddie, as well, it's a very important time of the year for a lot of Italian Australians.
Is it?
Yes. So figs are currently in season.
And the tomatoes.
Yes, a
Yep.
lot of Italian families are doing their sauce day or their sugo day. So making fresh tomato sauce for all the pasta and pizzas you could bloody ask for. So could you imagine rocking up to your brand new room constructed by the Grounded team to be welcomed by Paul Natoli and the team with fresh figs and sugo? How cool would that be?
I
Look
reckon.
at that. How cool is that?
Why don't we just go into the dry mess and just have a big sauce making day with the Grounded team?
Actually, that would be so fun.
Oh, mate, I want to do sauce making with Paul and Natoli on site in Perth. I don't care where.
It is a perfect, team bonding experience. I love it. And I mean, that is the level of dedication Paul and the Grounded team have to making these accommodation villages great for all the miners. I mean, look, we'll play the video just to even check out the donga. If the rooms weren't already good enough, you've got double beds, blackout blinds, great security, good sized showers and TVs, and the figs and the sugo.
It's the indirect benefits of a Grounded camp is bloody pasta sauce. And
just that Italian love. I love it.
Go Sicily, go Paul Natoli, and go
Grounded.
Good work, GC. So,
other things they could be spending money on, which
Grounded or Gold Road?
Oh, sorry, Gold Road.
Gold
back
Road
to
should
Gold Road.
Spend your money on Grounded, and then they're going to be spending it on.
Then they're looking at an underground study for Gruyere, so they're about 15 mil of drilling to be spent this year. They put out that Gilmore PFS, sort of another nice ore source there, but that's 36 mil capex. They're obviously doing, as usual, more exploration at Gruyere in general. But it's not like there's capex bills of hundreds of millions of dollars going out the door in the foreseeable future at this stage. So, assuming all of this comes to fruition, what are they going to do with all this cash? And naturally, this question was asked on today's quarterly call, so we'll play a bit of a snippet.
Apologies, I missed this coming on late, but obviously around the De Grey acquisition, obviously as a major holder you have a bit of influence with the outcome there, but in a scenario where that goes through and you get a further call at $800 million onto your debt-free balance sheet, how do we think about the uses of that capital, just given historically you've talked to M&A and maybe adding more assets to the portfolio, but the current gold price environment makes finding something that's accretive maybe a bit more challenging, and FX maybe limits offshore. So I guess how do we think about the potential uses for that capital in that scenario?
Yeah, look, I really don't want to get into speculating all around because, the Northern Star offer, I think a lot of the market, like you're doing, is kind of banking it's going to get done. But, of course, there's other scenarios that may or may not emerge. And, we don't want to be on record as indicating one position or another, because simply we want to be able to keep all of our options open, which is what's in the best of Gold Road shareholders. Probably one thing I will call out is I have seen a bit of market commentary about, if we accept if and when we accept, or sail out of our position, that will mean that we'll have more than $1 billion worth of cash. Probably people are missing that if we sell the shares, ultimately we'll have quite a big tax event, and that needs to be considered in the ultimate cash balance that we may get to.
Oh, the good old straight bat.
Yeah, so keeping the options open, not wanting to speculate, but we can have a crack at speculating. So, that's a lot of, obviously they've got some plans already as some organic growth at Gruyere and things like that. And, increasing production the next few years, potentially going underground, all the rest of it. But, could we see returns to shareholders like a special dividend or something like that? Could they use those funds to do a deal? But then a potentially interesting one is, does someone else take out Gold Road to get access to, 50% of Gruyere? It's an operating asset. There's not too much future growth capex required to, keep it going at the levels that it is at the minute. And there's no debt in the company at present. Is that sort of like a neat opportunity for someone to pick that up? What do you reckon?
And as you said, if they're on an EV basis and what they're going to produce with as a non-operator considered a bit cheap, it would make sense, wouldn't it, to get access to $1 billion? So that'd be a lot of fees associated with raising $1 billion.
Oh, the 6011 would be very happy about that, wouldn't they?
I have a deal for them.
What do you reckon?
I'll bring it up later.
Okay.
But
Stay tuned,
it's
money
random,
miners.
but there is something up for sale.
Okay.
What do you? What would you? What is the Gold Road identity? Like, are they? Would they just look at investing money, like acquiring pieces of projects as a non-operator? Like, it's not.
I think that's a good question.
Not the bloody dumbest thing.
No,
mate. And there's plenty of.
I mean, Tropicana's going pretty all right for Regis at the minute. It's not to say you can't have, great success in those sorts of situations, but I think that's a good question to ask. What do they want to be? And that might determine what sort of assets they, may or may not look at, or whether they just want to invest in Gruyere and, just return funds to shareholders that way. It's not the only way to generate value for shareholders is, doing deals and growing bigger for the sake of being bigger. That could be that too. So there is a few options.
Imagine if they converted their holding into Northern Star into a project level ownership of Hemi.
Oh, to swap the equity interest in Northern Star for project level in Hemi.
So they were, 20% holder of Hemi and take some capex pressure off Northern Star.
You sound like you've been on the desk too much. Lots of good trading ideas.
But what would they? But that's like, what would they if they were going to be a gold miner? What would they go say to Spartan? Can we buy 20% of Never Never? And Spartan could say, "Oh, we'll bloody sell that for shitloads." Like, who knows? I wonder if it's going to work both ways. If Gold Road are going to be looking to buy things at the project level, stakes, or companies are now going to look to them and say, "Hey, you've got cash. You've got to do something. You want to buy 30-40% of this office." I don't know.
I think that would be one to watch. I think it would be a very interesting one.
Me and you, GC, we can figure some shit out here. Don't worry about that. Yeah.
Love a bit of spitballing.
Or they could just do a huge special dividend.
Yeah.
Well, wouldn't it? Would it make more sense to do a dividend, or considering the future of Gruyere, just do a big frickin' buyback and, really increase the earnings per share of what Gruyere is going to deliver long term?
Yeah, it's certainly worth looking at both. I mean, the next company we're speaking about, Perseus, I mean, not to that extent, but I mean, they're doing a buyback and they've paid dividends, a combination really. But actually, going into Perseus, so they finished the quarter with US $704 million of cash and bullion, and that excludes their listed investments of US $67 million, no debt, US $300 million of undrawn debt capacity available as well. So that's like $1.1 billion in the Australian peso in terms of the cash and bullion, and then you've got the undrawn debt on top of that as well. They made notional cash flow of US $173 million just this quarter alone. But it seems a little bit more obvious where they'll spend their money. They've got as I mentioned before, they've got their buyback, $100 million buyback. underway. They're paying dividends to shareholders. The other day, they declared FID, final investment decision, on their CMA underground at Yaouré, the gold mine there. So that's around 125 mil capex over FY26, FY27, first production Q1 FY27. So there's about 1 million ounces at 4 grams a tonne of gold there in measured and indicated resources, and there's another about roughly 500,000 ounces at 3.4 grams in inferred resources. And Perseus reckon when that's combined with the existing sort of open pit sources, it should extend the Yaouré mine life out to at least 2035. Obviously, there's Nyanzaga as well, the gold project in Tanzania. They acquired from OreCorp about a year or two ago now.
Yeah.
So they're finalising the fiscal terms with the government at the minute, which they were sort of saying it's advanced but a little bit slower than they had anticipated. And looking at, assuming that's all okay, FID in basically the current half, the second half of FY25 that we're in now, with first gold in Q3 FY27. The DFS that OreCorp did back in the day, so more than a couple years ago now, had sort of US $474 million of pre-production capex in there to get that up and running. Now, mind you, Perseus is reviewing and finalising their own DFS on Nyanzaga, but Jeff Quartermain on today's call reckoned it would be in the order of US 450 to 500, and that they should be able to pretty comfortably fund that out of cash and future cash earnings as well.
Yeah. And then you got the pending takeout of Predictive.
Yeah, so they picked up that 19.9 stake at the end of last year. So I had a look at Predictive today. They're worth about 620 million in market cap. I guess, it's a question we've asked before, when do you reckon they'll move on that? They got their sort of environmental approval, the ESIA, in this month, which then sort of is the precursor to getting the mining permit. So do you reckon Perseus just wait for the mining permit and, there's a DFS that's currently on track to be, completed this year. So do they just sort of wait for all of that? Is there really any rush for them to go at it straight away now that they've got this stake?
Now, considering what they've got in the capital projects they've got in the pipeline, it looks like there's two major ones. Considering Nyanzaga as well, it's like there's probably no rush for it. I wouldn't think. So yeah, I think they'll wait for, as you said, all those boxes to be ticked. Before they move on that. And because they've got the option to or to not. You wouldn't, because once you take it, you've got to sort all that shit out.
Oh, yeah.
You would assume a lot of them would convert over to Perseus, chuck a Perseus shirt on to continue working on what they've done. But
if they can sort it out, why not?
Less overheads to having them under your badge. So
no, that's right. So I think, to me, this sort of looks like a case of when rather than if.
Yeah.
But we'll keep an eye on that one. And then we've got a couple ones we did around the grounds, Maddie. So you had a quick look at Develop.
Oh, Develop, let's have before I get into Develop, let's have a little flashback of me little mate that come on not long ago. Well, what do you think about Develop and Bill Beeman? What do you think?
Hurry up, Bill. Get Woodlawn going.
Well, there you go, Chloe. Bloody Bill's getting Woodlawn
He's
going.
Getting it going
70%
for you, Chloe.
complete. Right, so Develop's update.
How are they going?
So
I'm a small ding on that also.
Oh, are you?
Oh, barely nothing.
Didn't know that. Go GC. Diversified mining services exposure. Right, so Woodlawn plan upgrade, 70% complete, they're saying. So the coming quarter is going to see production and cash flow once that's ready. So, and, they're pretty pretty keen on highlighting, and I've literally highlighted it. So, first 3 years of post-ramp-up production set to yield 425 mil of pre-tax cash flow. So, whilst repaying the debt they've got with the Trafigura prepayment, and that's at current copper and zinc spot prices. So, and so they've fully drawn that Trafigura facility, US 65 million, so about Aussie 104. So, and then the mining services wise, so they've got the revenue is obviously up because, getting more meters, more tons, and expanding at Bellevue. They've got a 6 jumbo mobilised at Bellevue. So that's, more jumbos, more revenue usually. But it probably helped as well. It's not like they probably had to go and buy it because they'd Beta Hunt and Mount Marion demobilised the work they did there. So they would have taken a jumbo
Shifted
from
them.
there and the people and gone to Bellevue and then probably sent one over to Woodlawn. So cash at bank sitting with $112. So that's got them fully funded for the Woodlawn recommencement, and cannot be more explicit, saying Develop will consider a sale of up to 20% of the Woodlawn asset.
But I feel like they've...
Gold Road.
Oh, yes, you did say you were going to say something. It sort of does. Takes the gold out of Gold Road, doesn't it? A little bit.
Well, nothing that a name change can't fix.
Can't fix.
Perfect bloody diversified exposure, gold and copper.
But they have been saying that, like sort of in their investor presses and things like that for a little while now. But I can't recall that it's been that explicit to be on the front page of the quarterly. So
anyway, bloody
very good.
There you go knocking. So you look at the cash. It's sort of, I'll bring the 5B up, but they've effectively went backwards 20 mil once they drew the debt and everything. But it says look, the decline. It says here the decline is also being rapidly extended to access the next 2 production lenses at Woodlawn. So they're obviously still doing capital development at Woodlawn. They've got, I think the mill contract there was 25 mil for the refurb by GR. So I'm not sure if any of that would have been paid yet. So there's still a bit of capital going out that, you're not going to make from mining services. The mining services is handy, but is, as I've said before, it is not where Develop are going to make their money. Mining services is very low margin. It is a bit of margin, but the money is from what they're about to do here at Woodlawn is mining copper and zinc. And hopefully if prices go up, it's going to be even better because you look at some of those high-grade copper faces, 10, 12% copper. Then you've got areas of one there, 23% zinc with 7% copper. So there's, you're going to have high copper areas, you're going to have copper zinc areas. And then you've got areas, like one area here is 10% zinc, 1% copper. Oh, no, sorry, 30% zinc, 2.8% lead. So there's a bit of mixture going on. But, the thing with base metals as well, like you talk to Mr. Agricola, like it's been done for years. It's like base metal flotation. It's not like a lithium flotation plant. It's not like getting a ISR uranium project up and going. Like it's been, I think it's pretty tried and tested flotation. So it's like you would anticipate with the right metallurgists on board, it's going to be, pretty easy to float the shit. Floating sulfides is bread and butter. So hopefully I don't put the mocker on them. But Pioneer Dome Lithium Project found it interesting here. Strategic review of non-lithium critical minerals, including those hosted at the Sinclair mine. So I think the Sinclair mine, that used to be Extrata, used to be a nickel mine. That evaluate options for a potential extension to high-grade cesium and beryllium mineralisation identified outside the Sinclair pit.
What they are.
ChatGPT tells me that cesium and beryllium are in demand.
That's all you need to know.
You never know. Get a bit of value out of that. So, where's me bloody... Yeah, so that's... I've already shown the 5B, so we'll see. That'll be a bit of cash coming out of Woodlawn. That's going to be... pretty exciting. So
yeah, let's come round.
They will, and that joint is because a lot of capital has been sunk, and there's like, I don't know the exact numbers. I think there's 1 or 2 years of friggin' levels already
that have already
developed.
been done.
They've just got to start going through the ore now, because they wouldn't have went through the ore, because I'd say with that, looking at that, I don't know if it's pyrite or chalcopyrite, like you mine the ore and it bloody starts cooking if you if you leave it sitting there, the sulfides start binding together.
Oh,
Cook.
okay. Do they? Yeah, right.
Yeah, so you can't leave it sitting there. You get water on it and it just starts. They call it cooking.
Cooking.
Yeah, it just
Okay.
becomes friggin' solid. It's what we talked about with what one of the issues would have been at Capricorn Copper, like the sub-level cave just left in bloody water. It'd just be like friggin' metal again, effectively.
Yeah, wow.
So that's why but now they'll just be punching ore drives, and if all the capital development's done, your capital development extensions are completely decoupled from where all the stoping will be going on. So it'll be bloody free for all once they get going, I reckon, because of the time they've had the asset for and
all that
the
work
they've
they've done
on
ahead.
the way. So yeah, looking like another copper producer coming online very soon.
There we go.
In Australia, which would be cool. The big dogs, ding, ding, ding for LGC on Pilbara Minerals.
Yes, so last one for today, just a real quick one on Pilbara. Operations pretty much broadly in line, produced 188,000 tonne of spodcon roughly, versus 220,000 odd tonnes in September quarter. Look, this reduction in production volume was, pretty well flagged versus last quarter due to the transition to the P850 operating model. So that I'm going to pronounce this horribly long. Nungaju plant being placed onto care and maintenance. Unit operating costs were sort of roughly the same as last quarter, US $406 bucks a tonne. Realised price for lithium a little bit better. So they cited roughly US $700 a tonne for SC 5.3.
Okay,
so that was about 682 the previous quarter. So I think it was like about a 3% improvement.
Jeez, I never thought we'd be bloody talking about $18 lifts in the lithium price, realised spod prices.
Oh, geez, that's exciting stuff there.
Yeah.
But the P1000 sort of, plant expansion, CapEx, that's pretty much now largely spent.
Which is effectively P850 now, isn't it?
Yeah, so that's about 95% complete, all the sort of commissioning works underway. They finished the quarter with about $1.2 billion in cash. And that reduction in cash from the previous quarter was mostly thanks to the CapEx for P1000, sort of other, infrastructure and project CapEx. But it sort of appears like the Pilgangoora operations are sort of effectively washing their face at the minute. The Latin deal's also pretty much done and dusted. The implementation date for the scheme is next week, the 4th of Feb. They also, during the quarter, they picked up that $1 billion debt facility about mid-October, which they've drawn $375 million of that to refinance the existing or the previous loan facilities that they had. So I think most people thought it was all things considered, and in this, lithium price environment, it was a pretty decent quarter, performing relatively well and being prudent with their cash spend. But yeah, I mean, that Dale sort of talked about feeling that lithium sort of price environment sort of really bottomed out at the back end of this year. It's, closer to US $900 a tonne for, SC6 these days. So, certainly not too bad, all things considered, for this quarter for Pilbara.
I suppose extra $100 realised price, if they can get that. What's that? Bloody 85 million a year. So I'm sure that'd be
Pretty
better
handy.
than nothing.
Better than nothing.
But that could be the difference between them, breaking even and making money.
That's right. So, pretty much business as usual there.
So would you say are they breaking even? Are they losing, or are they making a little bit? Is it hard to figure out?
Oh, no, they did talk about it in sort of later in the quarter. It was like I think $8 million or something like that.
Yeah.
Yeah, it's pretty,
cash.
like from operations, it's pretty break even roughly. Yeah.
Right. So they need that extra $100 a
Be
ton.
very handy.
I suppose that is, I would imagine that is a good measure for, if you can say, right, if they're going to make 80 mil free cash a year at 850,000 pounds, 850,000 tonne, I'm thinking bloody uranium, you're like, well, how's Liontown going to go? So it's like maybe, hopefully, that means Liontown at their scale and underground might, break even in the 800s, hopefully. So, yes, we'll see.
The lithium winter is still very much around, but it seems to be defrosting a little bit.
Yeah, very much so. It's like the price is just being held just in that inconvenient place. Because you would think $900 a tonne spod would be, a bit of breathing room for Pilbara Minerals, Liontown, maybe MinRes as well, but like 800, 750, it's like...
It's a little bit too low.
Yeah. So it's like, who's got the power on that? Mr. China. Mate, conspiracy theories.
Good sesh today.
Hey, how fun's this?
I know.
It's like whether, buddy... As I said, I'm unsupervised. I might do a lot of damage in the next fortnight, but I'm going to have fun doing it.
You know who else is having fun, Maddie?
Moving open pit dirt, mineral mining services.
Absolutely.
Mate.
Building awesome camps.
You know who's have fun squashing tomatoes at the moment? Paul Natoli and the grounded team.
They sure have.
Do you reckon in that grounded building, I reckon there'd be a sauce session going on, a bit of shugo.
Oh, why not? Good for morale.
Good, it is, buddy. Good for morale. You know what I'm thinking about.
Yeah.
Oh, mate, sweet. Good morale having beers with the Sandvik Ground Support team the other week. And, I loved it. And he put it on LinkedIn too. And like Derek,
well done, Derek.
Derek Hurd. He's like...
Good at his social media.
Go DSI. And the team, beers with CRE last week as well.
Excellent.
Still due for a beer with Druba. He was supposed to come in the other week.
He's due soon. Go K
He's Drew soon. I'll tell you who else has gone... Nathan.daish had a baby due, but not anymore because he's got it now. It's got it.
Well done, Daishsat.
Saltbush Contracting due and Get Wet Solutions both due for a bloody big contract, I reckon. Saltbush bloody due for a haulage contract. The landman, he's bloody going to sort that Boss Energy bloody 80-kilometre pipeline to Gould's Dam.
Go
and to Get Wet Bladder. God, gee, talk about good sponsor love at the end too.
Love it. Hootaroo.
Hootaroo, buddy miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.